Hello, welcome to this new episode of Realpolitik. I am your host, Firas. I'm very lucky today to be joined by Albert Marko. He is an expert on financial markets, geopolitics, American politics, and a lot of other topics. Albert, thank you so much for joining us. How are you?
Good, good. Thanks for hosting me.
My pleasure. My pleasure. I thought I'd benefit from your expertise and start by asking you a little bit about the Eurodollar system and how it works. Everybody's still stuck in the petrodollar, but that's from a long gone era. So maybe help us understand a little bit the Eurodollar, how it works, and what it means for politics and international relations.
Well, like you said, the petrodollar is more of a relic than anything else nowadays, whereas now the eurodollar has surpassed the importance of what the petrodollar was in the 70s. It is the blood of the system of how the financial markets and the currency markets actually function. I mean, for instance, if Sweden and Japan wanted to do trade and interactive trade, well, it's not as simple where Sweden sends krona to Japan or Japan sends yen to Sweden and then it gets exchanged. There has to be a basis and a route for that financial transaction, for the financial settlement to actually work, and that only happens when the dollar is introduced as a basis. So you have yen converted to dollars at the New York Fed. From the New York Fed, they transmit those dollars to the Swedish, where the Swedish get their amount of settlement that they agreed on. See, a lot of people don't understand that without a U.S. dollar somewhere into the system, that currencies do not work. Commodities do not work. I mean, you have to have a basis of something that actually gets, that there's a basis of something that actually you can trade against. There's a value set, and a trade and settlement can happen according to that value.
Yeah. And so when you see talk about the BRICS and you see about the talk about BRICS countries or partners of BRICS countries trying to use their own currencies in trade without utilizing the dollar, how does that fit into the system, and what kinds of problems does that introduce?
It doesn't fit into the system at all. I mean, the so-called BRICS currency is nothing more than a fantasy of anti-American and anti-dollar traders out there and political agents that want to sit there and undermine the system as we have now for something that simply cannot work politically. I mean, you have India, which is a big rival to the Chinese in a system as a key component of BRICS. It's like, how do you make that work? You have many countries that are actually broke and have incredible debts to their GDP, 3, 4, 500% of their GDP, and you're talking about supplanting a system that's been around since the end of World War II. It's really a silly prospect. China really only uses BRICS as an arbitrage situation where they can sell their cheap products and get commodities or even dollars back out of the system to service their own debts.
Right. And that's why you sometimes see them using the UAE as a financial center where they use the Emirati dirham, which is actually pegged to the dollar. So it ends up being that they're trading in dollars, but they're saying they aren't. And it sort of becomes a, how do I get to my ear? It becomes a roundabout way of fixing the problem. And in terms of trading just, goods for actual commodities, there are problems with that, obviously, because the value of commodities changes quite a bit. So if you end up getting paid in coal or in oil or whatever it is, that creates all kinds of exchange risks, creates all kinds of problems. So it doesn't end up functioning in the same smooth way that the dollar provides.
Yeah, there's no elasticity where the dollar can be converted into digital form, cash form, loans, so on and so forth. You can't do that with commodities. On top of that, you have to verify commodities. So if I give you a ton of gold and say this is what the value is, I still need to I need to transport it, I need to secure it, I need to verify it. That takes time, and in that time, like what are the fluctuations that have happened in that time frame? So there's a lot of problems of just having commodities as a settlement procedure.
And that's why you're not a big believer in gold replacing the dollar as an exchange mechanism.
No, again, it comes with many problems. And for instance, if you're going to have a reserve asset as a global neutral reserve asset, that introduces many issues. I mean, if you look back historically, you'll see that the only time in history that you have a neutral reserve asset is in times of multipolarity. Well, multipolarity will end up leading into world wars because there has to be a hierarchy of nations and trade and militaries. It's just the way nature works. I mean,
yes,
people are trying to fight for so long, but nature supersedes everything else, no matter if you believe in it or not. It's just the way things happen. And for gold to be for gold to surpass the dollar, you would have to have many nations on equal economic footing, on equal military footing. And we are at least 100 to 200 years away from such an event.
Okay, fair enough. I'm gonna pick up on that multipolarity and whether or not we're heading towards multipolarity in a little bit down the line in the conversation. So with that in mind, walk me through a little bit the role of currency swaps and how the Federal Reserve stabilizes the global financial system. Every single crisis we see, there are these massive swaps that happen between the Federal Reserves and the world's central banks. Walk me through what that means and what it implies for the system and how it works.
Well, let's take as an example the ECB, which is probably the biggest benefactor of swap lines from the Fed. So the ECB gets dollars into their system, right? Euro dollars, right? And
yep.
That's basically they need a certain percentage of dollars in their system behind the euro to stop hyperinflation. So what they do is they get dollars and then they take those dollars and they lend it out to their other banks within the European Union. Well, those banks lend it out to localized banks. So by the time you get to the localized banks and they start producing loans for their clients, you're talking about 10 to 15 times multiple of $1. Right, in loans.
Yep.
Right. So in times of economic strife like we had in 2012, you have non-performing loans starting to cascade back onto the central banks, right, making them insolvent, basically. Right. You lend out $1 billion, well, $15 billion is coming back, and you only have $1 billion to back it up in your bank. It's problematic, right? So the Fed has to step in these situations and send over more dollars to be able to combat those NPLs, non-performing loans, right? Otherwise, the system gets out of whack and hyperinflation takes place. And, as you can see what happened to Zimbabwe, the same could happen to the European Union, although I'm making it an extraordinary case in such an event, but I'm doing it specifically so people understand that without dollars at the very base of the central banks, hyperinflation takes over.
Right. And this goes down to the way that money is created in the system. Money is loaned, and then multiples of that money is loaned, and then further so basically each dollar generated by the Federal Reserve becomes, by the time it reaches the recipients, 15, 20, many more multiples of the original dollar.
That's exactly.
So walk me through this sort of the influence that accrues to the United States as a result of how this operates. What happens if the U.S. decides we're not going to give you any dollars?
Well, I have been a big proponent of such an event to pressure a lot of the allies and adversaries and, say, well, you're not going to get us dollars this time because, it's beneficial to the United States because we get better trade deals, right? We get better geopolitical leverage when needed, specifically with the European Union. Sometimes with Asia, I mean, the Chinese have been wise to the game where they've been arbitraging gold and commodities to offset that. But, again, at the end of the day, they still have to buy treasuries through proxies in the Caymans or Belgium to accumulate dollars for the system. So they have to they have to abide by certain like mathematic principles.
Right. Right. And so how does that relate to the American budget deficit and to the American trade deficit? This system can't operate without big deficits from the United States, right?
Yeah, that's correct. I mean, the United States is the one that's swallowing all the deficits to enable trade to function globally. I mean, there's you have a lot of Americans that are opposed to this because they don't quite understand that without this system in place, that trade globally just stops, and that affects not just the world but affects the United States back at home because we don't make very many things onshore anymore. We import quite a lot of things.
Right. And so with Trump trying to fix trade to get better trade deals to reduce the deficit, what does this do to the system?
Well, that's really difficult to say because I don't think that Trump's tariff plans are about really lowering the deficit and whatnot, but more about offsetting future spending, right? So the tariffs that Trump introduced were nothing more, in my opinion, than generating revenue to be able to offset his tax cuts for the coming fall, right? You saw that big, beautiful bill that he keeps mentioning. There has to be offsetting costs. And the only way that the United States government can actually make that work is with this tariff revenue. Although the legality of that is quite questionable. It's actually a gray area because normally they're not allowed to do such a thing. But in the past couple of years, since Biden's been in office, I mean, 50-60% of the American public have been in a recession. So the government revenue has been quite damaged with that. And this is
Right.
This is probably the reason that the Trump tariffs were enacted to begin with.
So we heard from Biden and from Trump that the objective is to get the United States to reindustrialize and to reshore a lot of industry into the United States because that's necessary for American jobs, that's necessary for the well-being of the average American taxpayer. This seems to clash with the nature of the financial system and how the financial system works.
Yeah, I mean, it's a good story for elections, but the reality is such an event would be so drastic, and it would take 10, 20 years to actually see fruits of such policies come about that it's just I don't take it seriously. I mean, sure, we can have a few auto industry jobs come over to the United States just because of the tariffs and whatnot, but those are few and far between. You're talking about maybe 50 to 100,000 jobs total, right? I mean, what do they really expect? I mean, they say that they want new industries and new factories popping up in the United States. Those are $1 billion+ investments that take a decade to materialize. It's just not it's not as simple as saying this is what we're going to do and it happened a year later. It doesn't work like that.
Okay. So what do you think he's trying to do? Just do you think Trump is sincere about this, or do you think that he's just using this cynically, or do you think that he doesn't understand the system?
I just don't. I think that he doesn't understand the system, right?
Okay.
I think that he was sincere in his motives, but once Besant and other people got involved and actually describe what it is, what goes on in the financial system, I think that at this point it's more about creating a narrative on the markets and the U.S. economy more so than actually producing anything onshore.
Okay. So, and you think he's understood that this can't be done, and he's accepted this?
Oh, at this point, yeah, I'm sure he has. I'm sure he understands that this can't be done in the time frame that he keeps talking about in the media. There's just no way.
Okay. Because setting up these factories takes, 5 years, 10 years for it to actually become functional and productive, for it to actually transform things, and therefore this is a marathon if it is to be done at all. And if it is to succeed, it will come at the cost of breaking the financial system as we know it.
Yeah, of course. And on top of that, you have regulations in the United States that makes things costly, like the EPA, the Environmental Protection Agency, has a lot of regulations. So whenever you start building a factory or have these plans to do so, you have to go through a gauntlet of regulations on top before you even start breaking ground to building a factory.
Yeah.
So the reality is, you're talking about 2-3 years of just legal work before a shovel hits the ground.
Yeah. Yeah. So okay, fair enough. You've always mentioned that the Federal Reserve manipulates the markets, and the Federal Reserve has a massive influence on the S&P 500 and sometimes on specific shares. Could you help us understand this a little bit better? I'm not sure I've personally understood it very well. What are the mechanics behind it? How does it work? What does it mean?
Well, it's not just the Federal Reserve; it's also the Treasury Secretary. Like, for instance, Yellen would use proxies, and when I say proxies, I mean other hedge funds, other sovereign wealth funds like the Norwegians, which is a big one, to pump the market. So they, buy a lot of shares of certain stocks, which mostly would have been the Mag 7, the tech stocks, because they're the easiest to move, and the market would go up, right? And then on the other side, the Federal Reserve, when they wanted to lower the price of oil, for instance, because that helps tech stocks and bonds. It's tied in a web. They have a trade desk with about 200 people that they can just start selling contracts on the futures market until the price of oil goes down, right? And I get into many arguments with people. They're like, "Oh, they can't be doing this." I'm like, "Why can't they be doing this? Why can't they? They have unlimited budget. They have no one to answer to." Right, specifically the Federal Reserve, right? They actually can create dollars that are temporary, that only last for like a month or a week. So they go into the system and they get evaporated out of the system. So you never see it on the balance sheets.
How does that work?
How does that work?
Yeah,
you just add a zero to the accounts. That's it. Just keep adding zeros to the account, and then whenever the account comes, whenever money hits that same account, you remove a zero.
Right.
And they can just do it. And they have their own. So that's the thing that people have to understand, is they have no really accountability to Congress or the president or anybody. They actually have their own charter, which they can modify at any time they want. It's a it's a private bank. It's not a public anything. Although the president appoints a chairman, he doesn't really work for the president anymore. He doesn't have to listen to the president. He can't even get fired from the president. That's why whenever Trump comes out there and says, "I'm going to fire Jerome Powell," or so on and so forth, nobody really believes it because he knows he can't do it.
How does that mix with democracy and institutions and elections? It seems that this
it doesn't mix with it, but so you're talking about a system that's the reserve currency, right? You have to have such safeguards, because if there's a problem in the system where markets are crashing and price of oil is going to 200, so on and so forth, you need safeguards. You cannot allow such thing to happen because governments will fall. Right. So you have to have these safeguards. Now, you use these safeguards in a politicized way for elections? I certainly should not be doing that. But unfortunately, it happened under Biden many times, and quite a few of the elites in the Wall Street were actually really, really upset about it, and that's why you saw a few of them flip over to Trump for the election.
And there's no way to sort of hold Jerome Powell accountable for that kind of thing, or to sort of say, "Don't you dare do this again," or "Don't do this next time," or anything of that sort.
No, because if you sit there and admit it, so if Trump comes out and says that, they start admitting to manipulation of the markets. It would throw the global markets in a tizzy. I don't even know what would happen, or how much like trust would be lost in the system, right? These are like phantom accounts that are supposed to be safeguards. Everybody on a certain level knows these things exist, but they don't really want to believe they exist, and especially politicized as much as it's been.
Right. And the system is fundamentally built on, American military power and faith in that system. So the minute that the faith in the system breaks down, the consequences can be traumatizing.
Yeah, of course. I mean, that's the thing that the American superiority is based on. Like you said, the U.S. military is unrivaled, right? And on top of that, America's legal framework and trust in the system is unrivaled. But you start to break that down, especially for the financial markets, and then you have a significant problem.
If you enjoyed this piece of premium content from the Lotus Eaters, head to our website where you can find more.